Hi, everyone. This is Greg from Spinoff Investing Simplified, coming back at you to talk a little bit about the billionaire investors that talk about spinoffs. Believe it or not, Warren Buffett, Charlie Munger, Seth Klarman, Mohnish Pabrai, and Joel Greenblatt all talk about spinoffs. Let's get started and talk about each one of them and some of the things that they've said. Warren Buffett said the following when he was talking about spinoffs from his 1960 partnership letter. He called them a part of what we would consider workouts. He said, "These are securities with a timetable. They arise from corporate activity, sellouts, mergers, reorganizations, and spinoffs, etc. In this category, we are not talking about rumors or inside info pertaining to such developments, but to publicly announce activities of this sort. We wait until we can read it in the paper." On June 25th, 2008, Mohnish Pabrai and Guy Spear, also billionaire investors, paid $650,000 to have lunch with Warren Buffett and Charlie Munger. During their lunch, Charlie Munger gave Mohnish Pabrai the following advice. He said, if you want to build a portfolio of great companies, here are 3 places to look. First, carefully look at what the other investors have done. This includes 13F filings of great investors. Second, look at cannibals, companies that are buying back a ton of their own stock. And third, carefully study spinoffs. It's interesting to note that of all things that Charlie Munger could say to Mohnish Pabrai to have a great portfolio, he would talk about spinoffs. Seth Klarman, in his book titled Areas of Opportunity for Value Investors, Catalysts, Market Inefficiencies, and Institutional Constraints, stated, many parent company shareholdings receiving shares in a spinoff choose to sell quickly, often for the same reasons that the parent company divested itself of the subsidiary in the first place. Shareholders receiving the spinoff shares will find still other reasons to sell. They may know little or nothing about the business that was spun off and find it easier to sell than to learn. Large institutional investors may deem the newly created entity too small to bother with. And index funds will sell regardless of price if the spinoff does not meet their assigned index membership. For reasons such as these, not to mention the fact that spinoffs frequently go unnoticed by most investors, spinoff shares are likely to initially trade at depressed prices, making them of special interest to value investors. Moreover, unlike most, when shares of a spinoff are being dumped on the market, it is not because the sellers know more than the buyers. In fact, it is fairly clear that they know a lot less. Finally, the last billionaire investor that we need to look at that talked about spinoffs is none other than Joel Greenblatt. His book, You Can Be a Stock Market Genius, is where I started to learn about these. And he says something really interesting in his book about this. He says, there are plenty of reasons why a company might choose to unload or otherwise separate itself from the fortunes of the business to be spun off. There is only one reason to pay any attention when they do. You can make a pile of money investing in spinoffs. In fact, the facts are overwhelming. Stocks of spin-off companies and even the shares of the parent companies that do the spinning off significantly and consistently outperform the market averages. Hey, that's what we've got from Spinoff Investing Simplified and billionaires who talk about spinoffs. This is Greg checking out. Thanks.